Hi, everyone. This is Jason Burek of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is a first-time guest, but I've been following his work for years since I found him on George Gammon. He's also a fellow interviewee over on George Gammon's YouTube channel on every 3 or 4 months. Chris MacIntosh is a global macro asset hedge fund manager. He is also an ex-venture capitalist and former investment banker. He has founded and built several multi-million-dollar companies in the investment arena, including overseeing the development of over $30 million in venture capital opportunities and advising family offices internationally. Prior to setting up Capitalist Exploits, Chris also had a career at Invesco Asset Management, Lehman Brothers, JP Morgan Chase, and Robert Flemings. So he knows where the bodies are buried at the investment banks. You can find his research over on the Capitalist Exploits website that features a number of paid research newsletters. Chris, thank you for joining me today.
Yeah, no worries, mate. It's good to be here.
So there's a lot of crazy global macroeconomic conditions going on right now. We're recording this interview on Thursday, May 12th, 2022. We have the dollar index well above 104. It's finally broken out of its 8-year trading range. We'll see how long it stays there, if it goes higher, if Brent Johnson and the dollar milkshake is right. But we also have food and energy problems, a very high oil price. We have very bad energy policy. But you just put out a piece in the last week or so called The Hidden Cost of Raising Interest Rates. So what is the hidden cost of the Fed and Jerome Powell, who just got reelected, I guess, to a second term to do even more corruption, raising interest rates?
Jesus, where to start? Well, I guess if we just take a step back and look at this from sort of a 40,000 foot view, the experience that we've had post Bretton Woods has been a extraordinary bull market in bonds. And so as the world got relatively safer, well, if that's the right word, relatively less volatile in terms of geopolitical conflict and so on and so forth, we had this extraordinary advances in globalization, right? So America basically said, look, we'll let everybody trade. You make sure that you use the US dollar, back us against the former Soviet Union, and we're all good. And that was kind of basically the sort of structure that went into place. And it boomed, right? So the world boomed, interest rates just kept falling. That all kind of actually should have ended, certainly in the 2008 crisis. But even prior to that, we had reached the limits of credit expansion, which was also in a feedback loop, fueling and assisting in globalization, further globalization, which in its first instance was actually kind of a decentralization process, right? So you had a lot of small, medium businesses that could now compete on a global stage. That increasingly became centralized to the extent now we had multinational corporations that dominated. So that Pareto distribution basically always asserts itself. And so this is why we go through cycles and waves. Anyways, that entire environment was one whereby bonds should have risen in value and did, at least in its initial phases. And then when that became more stressed, then central banks and the pointy shoes and the various ivory towers decided that we couldn't have corrections in that particular advancement. So they started intervening in all sorts of manners. You know, we've had, I won't list the various ones. Most of your listeners will be fairly aware of them, and certainly many of the attendees that you've had on the show will have discussed them at length. So that's just reached a point whereby it cannot be contained anymore. So we have this extraordinary debt-based money system, and that's now falling apart as a consequence of inflation, or I would suggest stagflation, which is a stagnant, shitty economy with rising costs of goods, and with the rising costs of rising costs of capital at the corporate level. In other words, if I'm going to lend you money or you're going to lend me money, we have to consider the risks behind that, as well as the risks of inflation, which are mostly supply driven. So the inflation period that we started talking about back 2018, we said was going to be a supply constraint-driven inflationary period. And so if you kind of think about the general always fighting the last war, many investors and market participants have been looking at the last war and said, oh, well, when we had last had inflation, it was the BRICS, right? It was this consumer driven consumption-led inflation. Rising middle class in Asia and the BRICS and da-da-da-da-da.
So it was
chewing up more resources. Sorry?
So it was demand-driven inflation instead of supply side.
Exactly. And so as a consequence, it's been not more difficult, but just we humans are, we're stupid creatures at times. And so we tend to just look in our own rear view mirror to try and understand what the future might hold, or some of us don't even do that. In any event, that was our belief, was that the inflation that we'd have coming wasn't going to be as a consequence of demand, it was going to be a consequence of supply. And that was quite simple just by looking at CapEx spend in various sectors, which led us to the investments that we began making and are now still holding in that broad space. But to your point of, what are the sort of hidden costs? Well, firstly, on a sovereign level, it is impossible for many of the Western-led economies to pay back the debts that they have now incurred. That was true in 2019, and it's even more so the case now post-lockdowns. And I say lockdowns, not COVID, because COVID could have been a non-issue broadly if it were not for the various lockdowns, which are far more damaging, have been far more damaging, and will be paying the price of those for many, many years to come. So the way that I have been viewing this is that we know that they cannot pay back the debts at a sovereign level. If the debts at the sovereign level if the interest rates on them start moving, that's obviously going to affect every other debt market in the world. It's going to affect pensions, insurance. It's going to affect, everything. So when you've got a debt-based money system, the entire system now is in extraordinary jeopardy as a consequence of this. What we've seen so far with the raising of interest rates by the Fed and the Bank of England more recently, I believe is more it's both reactionary as well as being a facade, right? You've got real inflation in the US running double digits. It's probably 12 to 15. Gundlach, I think, believes it's about 12. Shadow Stats is around 15, something like that. It doesn't really matter either which way. We're into double-digit real inflation, and we are nowhere near that on interest rates. And so the only way, if you, at least within a sort of microcosm, if you were to simply look at interest rates and inflation and say, well, we're going to beat inflation, you'd have to have interest rates that are higher than your inflation level in order to incentivize people to hold cash as opposed to getting rid of that cash. And that's not going to happen. It's just not feasible or possible. And so hence our call for a stagflationary environment that can keep raising rates, but they have to keep them certainly well below the real rate of inflation so that they can sort of pay off those debts. But again, the numbers are so extreme that I don't believe that they're actually going to even try and inflate the debts away. I think what is more likely, and this is not me pontificating about it, this is having spent an extraordinary amount of time reading through IMF documentation, World Economic Forum documentation, United Nations documentation, basically all the stuff that would give you a serious headache. It is clear when you go through that documentation that there is an intention to have a debt reset. The question then is how and what that looks like. So, we've had a few historical precedents the London Debt Agreement post-World War II, whereby Germany were about roughly half of their debt was written off, which made a lot of sense. It also created a boom in Germany, and so I think there's certainly, again, when you look at these intellectual idiots from these organizations such as the IMF, they're utilizing those circumstances as a justification to say something of that nature should or could be done. And it's a good thing for everybody, because it was a good thing for Germany. So therefore we can do the same thing and it's going to be a good thing for us. But the circumstances are very, very different. So my belief, not so much a belief, there's a certain, everything has a probability, right, Jason? So I say, what's the probability of them writing off the debt? I'd say that's extraordinarily high, both from a mathematical basis as well as having a look at what they have been telling us, which most people don't, understandably, go and pore over their long-winded bullshit documents. But when you do, you get an insight into how they are thinking and what they're pushing towards. So the real cost of inflation, this inflation that we're having, is multiple hidden costs in it, affecting various sectors. But I think the big issue that one should at least consider, purely as a consequence of it having a level of probability that is not zero, is a debt reset. It is a wiping out of the domestic, it would be, I think, domestic debts, because as soon as you default on international foreign debts, you can invite war. That being said, certainly the experience that we've had over the last few months, the freezing of Russia's assets and so on and so forth, nothing is off the cards at this point in time. And so the question for an individual is, what could that look like, and what steps could one take? Because my belief is that they would introduce, they would both default on obligations, and this is true across Western Europe. I think it would come to Western Europe first because it would be the easiest place to implement it. Many of these intellectual idiots are all based in Brussels and Davos. The EU is certainly under their control, and they have so as a consequence, they have the ability to do things which I think in the United States are more difficult to do, just because you have a level of sovereignty at the state level that doesn't exist in Europe. So they can push all sorts of shit through there, which would have much more resistance in the US. So we're watching that pretty closely. But I think there is it would be a combination of bringing in central bank digital currencies while simultaneously then wiping out the debt. If you go back, and I won't talk too in depth about it, but if anyone wants to, you can go and research how the euro came into being and how countries were literally robbed in that whole process. Portugal in particular, well, people just didn't understand. And I say people, was politicians, as economists, everything. When they implemented and brought in a new currency for those what used to be sovereign nations, there was a confiscation that took place, and so I think something of that nature. It's been tried and tested before, and it was successful. And I suspect the hubris that these Davos man has will bring them to trying to do the same thing, but at a grander scale. So a central bank digital currency, while wiping out a lot of the obligations, pensions, education, all sorts of nonsense, and then simultaneously introducing UBI, because as soon as you take something away from people, obviously there's going to be they'll be upset. So they will mask that with, no, well, we're producing something even better. It's a little bit like, here's a fantastic T-bone steak, Jason. Oh, no, that's gone, but, here's a burger patty. One is better than the other. But if I just took the steak away and you didn't get anything, you'd be a lot more pissed off than if I gave you the burger. So,
or like in China, if you criticize the government, they can shut off your bank accounts, your credit cards. They can shut you out. They can make it so you can't get on a plane or on a train to do business. So that's
all. That's where the bringing in of a central bank digital currency is so powerful and so valuable to them, because they can direct spending, and that comes into MMT. If your listeners are familiar with MMT, modern monetary theory, and there's this idea that they can control inflation as a consequence of really actually controlling spending habits. Now, when I was first introduced to that, and like most people, I think people were thinking about that while simultaneously thinking about our fiat-based system and not programmable money. But when you combine that theory with programmable money, you can see why these people are so strong in their belief in this, because you can actually do it. Like if you and I want to go and have a barbecue, and we try to take a trip down to the local supermarket and go and get us some steaks and whatever, and we've reached our quota of red meat for the month. Like you just get a card decline, right? It's
Orwellian. Yeah, it's what similar things happen in China. And then
absolutely.
Well, the other thing, Chris, that's important, I think, and China's already doing this, is the digital yuan in China. It's integrated. So the central bank digital currency, I think the plan is to integrate them with the social credit score. So then they can punish you for free speech, for speaking out. You do or say the wrong thing, they could start penalizing you, like you said, with the amount of meat you eat, alcohol, maybe importing foreign goods in China. I think you get penalized on your social credit score if you want American whiskey, or if you want Japanese whiskey, if you import or foreign porn. If you are caught buying these things on your credit card or debit card, your social credit score takes a big hit. So they can potentially just shut you off from the system and make it very difficult for you to even eat food or survive financially if you piss off the government.
And it'll be brought in initially under the public good. If you just think about a taxation of, say, tobacco and alcohol, okay? If you wanted to smoke cigarettes, there was a tax on it. There has been in much of the Western world. And so, yes, you're allowed to smoke them, but you're paying a price for that, okay? Now, they'll introduce that as the sort of social good, saying, well, it's for your health and cigarettes are bad for people, and so we're trying to disincentivize and we don't want young kids onto it and blah 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 blah. Now, much of that might well be true, but when you realize that when you vest that power in the state, they can use that for anything. They can say, well, you've used up too much electricity this month. Whatever. I mean, it goes down to every single level. And then, of course, when you think about crypto, which is programmable money, you can program that money in any way, shape, or form you please. So if you think about Japan's problem, right, which is one of deflation, or has been, they've tried all sorts of various schemes to try and incentivize people to spend money. One of the schemes that they tried was basically coupons, which expire. If you get a coupon and you could go and spend the money and it would expire, on a particular date. That didn't actually work that well, which is kind of interesting. Although when I look at, the cupboard drawers that we've got at home, there's all sorts of bloody stupid coupons in there which expired years ago, and we've never bothered with them. But I think part of that is actually because they haven't been of high value to us, or we've just been busy. But if you think about it as a programmable money, where you see a balance on your account and you then get notifications, almost like a gaming situation, where you get notifications saying, hey, you're going to lose 10% of this by the end of the week unless you spend it. I think that could be quite a powerful incentive for people to go out and spend the money. So that's just, you come back to that MMT type, theory or structure, combine it with programmable money. They can incentivize you to spend. They can control where and what you spend the money on, and they, So look, all of this is just, there's nothing new under the sun. This has all been tried before without this type of technology. Control of people's lives is not a new thing, and we know how it ends. So the question for listeners that you, I think, should ask yourself is this coming? That's, to me, self-evident that it's coming. The question is, where globally is this going to be implemented? To what extent? And how does that look? Because what happens, of course, is capital always shifts to where it's treated better. And so if you have a particular region of the world that implements what we've just discussed, or any sort of variation of it, and you have another region of the world that does not, or implements something less draconian, it's simple, capital shifts. And I think that we have a situation where, because the price for this is so high in terms of people's living standards, that there's an extraordinary amount of asymmetry here. If you just consider that, I mentioned that I think Europe is, Western Europe in particular, is the most prone to this, or is one of the regions that is most likely to have it implemented the fastest and the soonest, and then probably with the most ease. That is an incredibly large economic bloc. And we are already seeing capital flowing out of there to various jurisdictions. I've just come back from spending some time in the Middle East, Dubai in particular, one of the places. And I've had a thesis around this for some time, and it certainly seems to be playing out, which is capital shifting to places of relative safety. And I say safety from taxation, from capital confiscation, and so on and so forth. So that trend will just accelerate. And once the door shuts, because remember, this is something that can be implemented whereby once it's implemented, you can't get out. Like if you haven't already shifted capital out, you're done. There is no, I can, I don't like that. Now you can shift your physical person, which is the most important capital, to another location. But that's, it's a little bit like that saying, what's the difference between an immigrant and a refugee? It's timing. And you'd rather be the former, not the latter. So, but again, so I think there's a potential, a probability. It's not like I want to beat around the bush and be an economist saying, on the one hand this and on the one hand that. Those people annoy me. But there's probability, there's a decent probability that something of this nature is likely to be implemented over the next decade. Maybe as soon as a few months, maybe a few years. I have no idea. I'll watch it as closely as I can, and I have been. But my sense is that there's a pressure to having it implemented as fast as possible, as a consequence of this interest rates rising and the debt system blowing up, and there's a need to keep control of that. And be at the tiller rather than lose control. As soon as you lose control, you'll lose it at an economic level and then at a political level, and then you're into very chaotic, difficult time frame. So I think they understand that, and there's a strong urgency to bringing this in as soon as possible. So, but again, that presents us with extraordinary opportunity, I think. At the end of the day, there is a need for goods and services that people will fight and die for. I don't know if people have been watching what's taking place in Sri Lanka as an example. They're busy torching politicians' houses and rioting and attacking police in the streets and you name it, because they are literally starving. And so everything has probabilities. And when certain things take place in certain parts of the world, it affects where they may or may not take place elsewhere. And so, as an example, they just froze Russia's assets, right? So tell me, what central bank and government around the world didn't stop and look at that and go, are we so-called friendly or unfriendly with the Western powers? And what risk levels do we have? It is impossible that most governments around the world did not have that conversation and start beginning to take certain actions if they felt they needed to. So, by using that draw card, it kicked off something else that you're not going to stop. So in the same light, as soon as we see a central bank digital currency coming in, if we see some sort of debt repudiation, that will kick off globally actions by individuals, people like you and I, local level governments, national governments, corporations, you name it.
Well, I just want to clarify some things for the listeners, because you talked about all these different examples, but you're predicting in terms of probabilities, because obviously nothing's for certain, but you're expecting that these governments are going to go to even more protectionist policies, because we've seen fertilizer bans, we've seen the lack of goods moving across borders now for the last couple of years with the lockdowns, with supply chain problems. Recently with Russia and Ukraine, we've seen all these fertilizer bans. I think there's been over half a dozen countries that have banned fertilizer exports, which is going to cause farmers even higher costs, less crop yields, etc. But in addition to those, the lack of goods crossing borders and protectionist policies, you expect capital controls then, where they're going to make it very difficult for capital to go from one country to another, one stock market to another. And this is what the China model, because China has very strict capital controls. Yes, capital does leave China, but normally, and I've spoken to people, even people asking me if I could help them get clients, like a 30 or 40% money laundering fee for Chinese families to get their savings out of China to buy foreign real estate. So is that the type of future? And then you think that China model with heavy capital controls is going to be exported into more countries?
Look, we have, if you can go back and read like hundreds of years of history. In times of economic distress, there's a couple of things that we do as human beings. We look inward, we go tribal, basically, right? Because you're looking for trust. Trust is the bedrock of economic activity. And what we're seeing is a breakdown in levels of trust. So, can you trust at an international level the US dollar? Well, clearly not, right? If you're a sovereign nation, a nuclear one, right? Your central bank reserves just got stolen. $600 billion worth of them. And so, that's an extraordinary level of breach of a trust that existed that's now gone. Of course, this can take place and is taking place at every level of society in varying degrees. So people will continue to go, I would say, sort of tribal and look inward. So protectionism is how that gets exhibited, how that gets manifested in society. Resource nationalism is one of the things that we've spoken about for about 3 years now, that we've said was likely coming as a consequence of this economic contraction and how human beings act under the times of stress and what they do. So the first thing they sort of do is retrench. Here's a good example. Think about the United States, which is bifurcating into, it's very, very partisan, right? More so than it's been in pretty much anybody's lifetime. And so people would leave and are, say, California or New York and go to Florida or go to Idaho or go, to, where they feel like, quote unquote, their people are. So they want an ideological reprieve, as well as the whole economic taxation side of things. So there's multiple elements, but those are two of the very important ones that are causing people to move to various places. Once you get to wherever it is that you've decided to move to, if you then come under pressure, right, because you've escaped a particular pressure wherever you were. Let's say you left California because the taxes are too high and there's too many junkies in the street and whatever, and you're now sitting down in Naples, and you go, okay, cool, this is better. And then you have more pressure coming at you now. Well, what you typically do is you then fight for it. If there's nowhere left to run, then you stay and fight. So we have this at a national level where countries will retrench and retreat back to what they can control. And then they either fight or they build new alliances. So imagine, if you will, well, I've just been writing about it fairly extensively over the last few months. You take a country like Turkey, and so Turkey is reliant on, amongst other places, Russia for energy, as are many others. They have, for the last few years, played that particular card of NATO to acquire and continue to acquire funding for their military from NATO. But in reality, they have very, very little interest in that which NATO has. And their alliances economically that they've been building are with China. Basically everything that's getting, or much of what's getting built in Turkey is financed by Chinese banks. And there's a very strong, increasingly strong alliance on a military level with Russia, even though they have their own disagreements with respect to Syria. So you're seeing these alliances that are getting built that didn't exist in the past because there wasn't a need for them to exist in the past. And so it's a restructuring of the world that is taking place right underneath our feet right now. So figuring out what alliances are going to get built, what that looks like on an economic basis, is, I think, relatively important, while at the same time, we know that when you go through a restructuring like that, it causes trade routes to collapse, it causes supply chain disruptions, and again, the nationalization of resources always causes a reduction in supply. And all of this is taking place at the same time that we have this extraordinary debt bubble, which is bursting. And so they're going to have to print money to try and placate the masses, as well as pay for the things that keep the machine going. So it's a it's a hell of a time to be alive, I tell you that. And it is very intellectually challenging for someone like myself who manages money and on a professional level, as well as providing the research service. But there's no walking away from it, Jason. You can't sort of sit there and go, well, I haven't seen this before. And, I'm going to sit this one out. Like, there is no sitting anything out. So,
well, you've had a lot. You've had a lot of people that went all in on Bitcoin, and that was working for a while, for about 2 years or 18 months or something like that, from, I think, part of 2020 up until recently, and now that's busting. So you're seeing the crypto bubble, all these NFTs, some of them are down like over 90%. You're seeing the cryptos, all this leverage. People are questioning all the tether, the stable coins, all these different things. So you're seeing all these things that people for the last 2 years were making a lot of money off of. Those things are all busting. But you brought up an interesting point there about what governments have historically done. I mean, I've studied history too. What governments tend to do during times of financial crisis, number one is war, but we have all these different governments that all have nuclear weapons now. So going to war, normal wars with nuclear weapon countries, probably, hopefully unlikely, But the other thing is currency devaluation, currency debasement, all different types of forms, whether it was paper money or pretending it was silver and then dipping copper coins in silver and then raising taxes. So like from a probability standpoint, historically, it's likely these governments, it sounded a lot of what you described as stagflate, tax, lie, which was my thesis, which was what governments wanted. The problem now is so many people have woken up to all the inflation and stagflation with the Google searches that the governments with this economic data, with GDP and inflation, they can't hide the inflation and all the problems that Americans and all the other people with their daily bills, all their expenses are rising and their incomes aren't growing. They can't hide it as well as they were in the past.
No, look, people are not stupid at the end of the day. And they don't need to know what the percentage CPI is. Most people don't even know what the CPI is, right? But they know that last month, things were better than this month. And they know that 2 years ago, things were better than they are, 2 months ago, and so on and so forth. And they can look at their bills and they can look at their discretional spending, it's you can't hide that from people, no matter how much you can tell them everything's good and there isn't any inflation or it's under control or it's transitory or any of these other ridiculous notions. At the end of the day, people are living that life, they're experiencing it. And so that in itself is just an additional layer of a breakdown of trust. And so what we're seeing on a global scale is a breakdown of trust. You talked about Bitcoin and crypto and stuff. What people, to some extent, were reaching out for was something that they could trust because they didn't trust the system. They didn't trust the fiat currency system. And so the way that we have, or the way that we view things and the way that we've played it as a consequence of our thinking is we buy things that are necessary, undervalued as a consequence of supply and demand, and we try as best to measure twice and cut once. And we will, the perfect type of investment for us is one where we will hold it for the next 10 years and do absolutely nothing. Crypto we had held for a long time. We top ticked that by absolute fluke, I think, really. At 61, we sold some at 55 and some at 58, and then we liquidated our entire position at 60, and then it kind of came off the boil. But and then we were asked questions further many months later around, do you think it's good? Do you think it's bad? And I can see the utility value of Bitcoin. All these other cryptos, to me, just looked quite similar to the experience that I had when I ran a venture capital firm back in the post 2010, where you just had an extraordinary influx of me toos, right? And that's not what you see at the bottom of a market ever. It doesn't mean that the thing can't go up a lot and you can't have a mania, but it's dangerous, or more dangerous territory for investors, and certainly for our capital. So we just stayed away. Like we pointed out back when you had Matt Damon, shilling crypto, and you had talk of, exponential logarithmic growth, and Cathie Wood's coming out with her you get all these narratives coming through, and then you had the Super Bowl, and guess what? Like 50% of the ads were all crypto. So it's one of those situations where you don't know. And I certainly didn't know that you would have a crash, but you just knew that it was too risky, and then you knew that you were not buying the bottom of the market. So when we see stuff like that, we just stay away, because look, it's the other thing is people go, "Oh, imagine you shorted it." Yeah, fine, but only if you're a very, very adept trader. And there's very few of those people who can time it like that. Very few. Most people think they can, and they might get lucky every now and then. But in general, they're going to lose more money than they're going to make trying to pick that next peak or next trough. So it's this. There's been this desire to look for another system, because the ones that we have in front of us are problematic, and we don't trust them anymore at an increasing level. And that's true in the economic world. It's true in health. I mean, who the hell trusts the health industry anymore after this fiasco with a pandemic? Who trusts the legal system? I mean, all these pillars of Western institutionalized trust systems are under attack. And so what do you want to own in that sort of environment? Well, coincidentally, we've had an extraordinary bear market in, I would say, Maslow's hierarchy of needs, literally, largely commodities, which is what we have been long for since, about kind of like 4 years. And so we were buying stuff that just was decimated. You had these charts that looked like ECG on a dead guy, and yet you'd look at the balance sheets and the income statements, and you're like, okay, well, massive capital expenditure has not been developed into these particular sectors, so there's a constraint in supply. And then simultaneously, we have monetary and fiscal policy that's going to be conducive towards inflation. And this, you can't bring the supply of a lot of this stuff online in any hurry. You take any oil well, you take a copper mine, you take fertilizer, which you have to manufacture from natural gas or potash, all of these sorts of things, just hugely capital intensive, often requiring debt financing, and a lack of capital spending. And then what we've got now is this woke world where, at an institutional level, if you want to go out and finance this stuff, people are going, no, that's, that's going to kill the brown spotted owl, and we can't have that. Or, Greta doesn't like it. No, let's go and build it out of hemp and unicorn farts. And, it's just, we're living in a world where...
Or corn ethanol, which takes away the food supply.
Yeah, look, the disconnect between reality and physics is, or the disconnect between the narratives and physics is so extreme. It boggles the mind. And so it seemed obvious to us we were going to have these bottlenecks in those sectors. That's worked out extraordinarily well, but I still think that, it's like we had it the other day with some clients coming to us going, should we take money off the table? And some of these things were up 3, 4, 5 times. And we ask ourselves the same question, because, we don't want to, we're managing client money. We don't want to cock it up. And it's our money too. I mean, there's no distinction between our client money and our money. And then we look at it and we'll go, okay, well, where's the supply going to come from? So even while we're, some of these, coal is a good example, which everybody hates, right? I mean, it's like Satan's, you can, if you're investing in coal companies, you'd be better off beating little babies to death with a sledgehammer. You'd be treated better than if you're a coal investor. And they're printing money, and they've done it very, very well. But then where's the additional supply coming from? And it's a very hard question to answer, because there isn't. And so, you go, well, what's normally fixed these problems in the past, which is capitalism, is supply coming on to take advantage of the higher costs and margin expansion that is being enjoyed by the existing players in that market. And we're not seeing that. That is really quite an extraordinary situation. We're not seeing it because there's a political pressure and ideological narrative that says the world's going to end in 12 years' time if we let cows fart too much. And, it's the absurdities are at the breathtaking, but nevertheless, that's just the situation that we're in. And so I think this is still relatively early phases in what will A, be a commodity super cycle, and B, a bond market bust. And you couple those two things together, and then you throw in that geopolitical fracturing that we discussed before, and that's what we have to deal with. It's very exciting in some respects, and at the same time, you realize that you're going to have to be quite awake, and that's not to say we're going to get it right. I mean, we were long Russia. Roughly 10% of our portfolio was long Russia, and then the GDRs basically went to zero. What's interesting, though, is if you try and we do try and do this, is build a portfolio has natural hedges within it. I think that's the best one can do. So for us, for example, our natural hedges are, think about a natural hedge to oil. Well, a natural hedge to oil is natural gas, coal, nuclear, right? Because if your baseload power isn't going to come from oil, where's it going to come from? You basically got oil, natural gas, coal, and nuclear. Those are your options for baseload electricity generation. Okay. So if it's not one, it's going to have to be the other or the other. And all of them have been decimated. So there's kind of like a natural hedge within the energy infrastructure world. So you don't just own one and think, oh, well, this one's going to be the best. No, you go and you try and build a robust portfolio. And then within that, you build it across geographies too. So like, for example, as pissed off as we are, I have been with respect to the Russian thing, we're still up around sort of 25%, because the other investments within that space benefit. Because look, it's like if you take, and we're looking at this now, Germany's threatening to nationalize their energy sector, and I'm like, great. All we've done is now just taken German energy assets out of the investment equation. Well, like that's a bit like having 5 pretty girls at the bar that are all interested in you, or that you're interested in, and then there's 5 of you there, and then one of the chaps just walks out the room. Well, guess what? Your odds just got better, right? So it's a little bit like you have, as resource nationalism comes in, it creates more asymmetry for relative other players, and that's kind of what happened with Russia, and it's likely, I think, to happen across Western Europe. France is talking about nationalizing energy assets. Germany's doing the same.
And if oil goes to, let's say, $150, $200 a barrel, we could see governments then, instead of incentivizing more supply to come online, we had the Biden administration dump the Strategic Petroleum Reserve. They changed the rules and dumped it. They didn't allow more drilling. There's supply shortages, lack of steel pipe. But then also you're hearing all in the US Congress, but other countries too, talk about windfall profits taxes on oil and natural gas companies. Well, the important point you made there is they have not, the oil sector for many years out of the last 10 years was not profitable. So they did not make the necessary supply side capital expenditure investments. OPEC is definitely not making the necessary capital expenditure investments. So even if oil does crash, Chris, in potentially like a short-term bear market for the next 6 months or something like that, I think it's a potential buying opportunity for the quality companies.
Absolutely. You nailed it. It would. There's a couple of things that could bring the energy complex back. One is if we had a ceasefire in Ukraine, ordinary, like you just futures traders are going to come in. They're already positioned there's a certain premium to the energy markets as a consequence of the war. If there was a view to that ending in some shape or form, I could easily see this coming off. That would be one opportunity. And the other ones you just mentioned now, should that happen, I can tell you now, we would be buying the snot out of that. Might be wrong, but again, where is the supply going to come from? Where? We've had and continue to have a lack of capital expenditure in the space. Europe in particular is now looking at this fiasco which they've created. It is a catastrophe of their own making by getting rid of their energy assets and going down this narrative that we're going to run the world in wind and solar, which we've proved in our work before is not going to happen. Mathematically, it's not feasible. At an energy level, it's not feasible. It's ridiculous that we're even considering and talking about it while the technology doesn't. We're talking about something where there's a belief that the technology will solve this problem, and then we're proceeding as if the technology existed. It's absurd. It is, and so
we'd overload the electric grid too if they try to force everyone to have an electric vehicle. We don't have the power utilities that are efficient. If everyone plugs in overnight, it would overload our electrical grid here in the US. We can't move the power across states that easily. There's so many, our electrical grid is bubblegum and duct tape. And then most people don't even think about this. What's the electricity going to be generated from? And it's almost impossible to get nuclear power plants approved here in the United States.
Yeah. No, look, I mean, and then if you are going to go down the solar and wind and okay, cool, let's build a wind turbine. Why don't we just run through what actually that looks like? Well, I'll tell you what, it's a shit ton of concrete, steel, graphite, which by the way never degrades. So where are you going to get your steel from without coking coal? Because steel is manufactured with coking coal. Now, I know the loony left don't want to hear this, but that requires coal mines to get your wind turbine that is so-called green. It's just, and then of course it doesn't work when the wind doesn't blow.
And it kills the birds. And then even worse than coal mining, Chris, is rare earth mining. You're totally toxifying the air, water, and soil all around the rare earth mine. That's the only reason China basically has a monopoly on the mine supply, or a near monopoly. Yep,
it is environmentally one of the worst things that we can do is much of this so-called quote-unquote renewables. I mean, in Europe, for example, they got bloody wood chips. They're saying that they classify wood chips as being renewables because trees still grow. Well, we're burning wood. The energy density the reason we went from burning wood to burning coal to then natural gas to oil and then to nuclear was this weird concept called energy density. Hello. And we're literally reversing trend, going back to burning fucking wood. Look, we're not Hansel and Gretel in the woods, for goodness sake, but that's what they're doing. And so now they're sitting and telling us that burning wood is actually environmentally friendly and renewable. And it's absurdity at every level. I mean,
did you see the Doomberg piece about biodiesel, where they've used so much of the arable farmland that could have been used for food? Instead, it was used in Europe and the United States for biodiesel and corn ethanol.
Yeah, I remember back in, what was it now? Probably 2015, I think it was, writing a piece all about the whole corn ethanol thing, which they'd tried out in Brazil. And then finally, that one of those major big projects actually got canned. But it just, yeah. And And so, all of this also feeds into the food crisis that we've been saying is going to come, and now is slowly manifesting itself, because you can't manufacture food without energy, or at least without the energy that we have been utilizing. And you cannot manufacture food at the scale that we've been doing so without simple things like fertilizer and diesel. The two biggest input costs for farmers are fertilizer and diesel, and both of those are under enormous pressure. So it doesn't take a genius to look at that and go, hey, we're going to have a food crisis. It's just, then, of course, you couple that with all these insane things that have taken place under this COVID scam, whereby farmers had. So, for example, if you were a farmer and you were not supplying a supermarket, the supermarket was considered to be essential services. But if you were supplying a hotel, and the hotel was now shut because social distancing and all this other nonsense, you no longer had a taker for your produce, and you had farmers plowing their foods back into the soil and going bankrupt as a consequence. And it differs in every country, but you've got in the Western world upwards of 30% of food production is not through the supermarket chain. So for almost 2 years, we were impacting negatively at least 30% of the supply chain, because we were shutting down both the productivity, the produce being made that was going to businesses that could now not operate, or had to operate under certain guidelines that were not optimal, and blah 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 blah. So for 2 years, we just completely cocked up roughly at least 30% more. But if we just take that little microcosm of the world of that, we impacted that, and then it's not like you can just sort of go, oh well, that was a bad 2 years, let's get back at it. No, your farmers have already gone bust. They've already lost some of their farms, or they've scaled down, or they've tried, it's like you don't just turn it around and go, oh, well, it's a bit like most people, if they lost their job for 2 years and had a mortgage or had rent to pay, and they didn't pay their rent, well, they're no longer living in the house. You can't turn around and go, oh, well, that was a bad 2 years, let's just get on with it. No, you're now living with your auntie Becky down the road, sleeping on her couch, trying to figure shit out. That's what's been happening on a global scale. So the food crisis is another one that's now manifesting itself. We've been playing that mostly via fertilizer companies, which have, again, they've done extraordinarily well. But if you go back and you have a look at what a bull market in fertilizer stocks looks like, oh my God! I mean, it makes crypto look similar. And again, where's the supply coming from? The extraordinary situation, Jason, that we have today with all of these things that we're discussing is that the normal mechanisms by which these problems are resolved have been either taken away or severely impacted. And so we're not seeing capital being deployed like you would have anticipated it would, to come in and solve the problem. And it solves the problem by profiting. And so, because it's been maybe legislated. So, for example, you made the call, you said it. How do you go and get a nuclear power plant up in the US? Pretty tough. How do you get a coal mine going in Germany? Like, good luck with that one, right?
They'll import the coal now, but they'll import the coal now under state of emergency or something. But yeah, you're right. Bringing a coal mine online is taboo there.
It's taboo in many parts of the world. And so what we're seeing is, again, this asymmetry that I discussed before, whereby certain nations and jurisdictions are just benefiting. The Indonesians don't give a toss, right? So they'll continue to produce coal. as will the Indians, as will the Chinese. And they've secured much of that supply as well coming out of Africa, who also will do what their handlers tell them. And when I say their handlers, it's whoever they owe the money to. So this gets back to sort of geopolitical reality of the way that the West has operated for the last 40, 50 years, which is to, largely in debt emerging market countries and secure the supplies. That's been true in the Middle East. It's been true in Africa. It's been true in Latin and South America. It's true now largely with respect to China, who are really just doing the same thing. The One Belt, One Road initiative is pretty much that, with various different bells and whistles. But back to the point, much of Africa is now indebted to China. It's Chinese banks that have financed a lot of their infrastructure and have secured a lot of the supplies that we're just talking about. And so, when you talk about resource nationalism, well, they've already secured a lot of those supplies. So you're kind of getting into the situation where largely the West is committing a suicidal act of saying, well, we're not going to, A, secure those supplies, and B, we're going to pursue this green agenda. Which again, mathematically, I challenge anybody to actually bring forward a mathematical model as to how this will work. It doesn't make any sense to me. And so we're just seeing more and more of a shift of those resources that are required to function or requiring any economy to function, shifting into different political hands. And so, it just means that you have to go, look, the Biden administration is now going hand in hand to fucking Venezuela, asking them to, it's just, and then they went to Brazil. They asked Petrobras to increase supply, and Petrobras said no.
Venezuela doesn't even have the oil production. They were producing 4 million barrels per day in 2007. I think they were below 1 million barrels per day in 2019. Maybe it's up a little bit, but I think the Chinese own a lot of that oil anyway. The Chinese have a large claim on it. It's
been secured, but the other, and then look, we could talk all day on this. We could get deeper in. You've got refining capacity. Right. At the end of the day, so one of the problems with Venezuelan oil, of course, is it's heavy crude, right? It's not the same as WTI so it's a different, you can't just use that oil like other oil. It takes a different process to actually get it usable. And of course, Venezuela destroyed their capacity to do that with Marxism. So now that has to take place under, in other countries as well, as some of it still takes place in Venezuela, but it's now largely more under the control of foreign powers. But look, the ability to bring that supply up is very, very constrained. And even if it did increase, it's going to be on a political level, not in the hands of the West. That they've lost that particular gig. So short of invading the country, I don't see that transpiring. So there's not supply. We can't look at that and go, okay, that's the supply potential. It's not. So you got Petrobras. Again, they just turned down the Biden administration, basically told them no. We're seeing the same thing out of Saudi. The Saudis wouldn't even take meetings with the US. They basically said, don't bother coming. We're seeing this geopolitical reality now taking place. And, I've said it years back, if you don't have energy security, you don't have political security. And that reality is is now being experienced. And what's shocking to me is that not only is it being experienced now at a visceral level in Europe and Ukraine, but the reaction to it is the exact opposite of what it should be to solve the problem. It's literally doubling down, saying, no, this is our opportunity. It's part of the Great Reset, of course, this is our opportunity to reset everything and to run the world on green energy. But again, mathematically, I challenge anybody to bring forward a model that will show how this will actually work. I mean, we back in, what was it, I think it was 2017, 18, somewhere there. We sat down and we mapped out, because at the time the Brits, they came out and they said, no, they're going to have by, I can't remember, it was 2030, I think, roughly half the cars on the road in Britain were going to be electric vehicles. I was like, okay, cool. That's what the politicians are saying. Well, let's go there. Let's just go and have a look and see what it would take for that to actually, like, how would that actually work? And we looked at how much copper was required, how much cobalt was required. It would have taken, that's right, it was in 2018, because at the time, it would have taken all of the global copper supply, 100%. That would mean that no one else in the world was going to use copper. Not Germany, not the United States, not Canada, not anyone. Just the Brits and their little Fiat Puntos and Ford Fiestas and all that shit. Just those guys. They were going to consume 100% of global supply, right? And then you went through all the other lithium, cobalt, and you just realized this is fantastical. This is ridiculous. Because while they were saying that, the Germans were saying the same thing, as were the Swedes, as were the French, as were the Aussies. Everybody was getting on board this, going, oh, no, well, we can do one up on you. You're going to have 50% of your cars by 2030. Well, we're going to have ours by 2025, or, whatever it was. They just kept coming out with all the ridiculous nonsense. And so, if it wasn't going to work for Britain, and it wasn't, how was it going to work for all these other countries combined at the same time? The only way that would work is an absolutely monumental build out of shit ton of mines. And we need to find the resources. It's not like you just go, okay, I want a copper mine, let's go get a copper mine. No, you got to go and find the copper.
So a large mine might take a decade with all the different steps that are needed. So it's not like
you
can't they could just turn a switch on.
So we're headed for an energy crisis, massive energy crisis, which means that we're headed for a food crisis, while at the same time we're clearly in a monetary crisis and a debt bond or a bond hyper bubble that is now it's in the process of collapsing. So interesting times. And within the currency world, there's very little room to wiggle, because this weird situation that we've had for the last few decades has been one whereby all the major central banks around the world were kind of doing the same thing, so there wasn't an exit valve. Like if you go back and you think about, like, say, the Mexican peso crisis, fine, you could go, okay, well, these idiots are cocking up the currency. Let's get out of pesos and we'll go buy dollars or sterling or whatever it was. You had an exit valve. You had a place that you could go to that was better. The problem that we have today is that all of the major currencies, euro, yen, dollar, all are broke, all are inflating, but they were doing so at varying levels, which meant that on a daily, weekly, monthly, annual basis, money managers had to sit there and say, okay, what am I going to do? I need to have a certain level of liquidity. Where do I go? Euro, yen, dollar, euro, yen, dollar. That was it. And while all of those countries were all simultaneously doing stupid things, you didn't have, like, they could keep doing stupid things. So on an aggregate basis, you knew that you were investing into garbage, but you didn't have an alternative. There just was no alternative, because you needed the depth of market, you needed the liquidity. So you couldn't go out and buy krona or some other currency, because you're going to move it. Like if you're a big asset manager and you've got to move a few billion and you need it settled days end, then you're not going to do it. It's euro, yen, dollar. So that's kind of created this situation where they could do things that were more extreme than they would have otherwise been able to do. And now we're at the tail end of that. You mentioned Brent thesis around the dollar. And it's funny, years back, he and I were discussing this, and I was explaining it like a collapsing star. And I said, if when a star collapses, what has it sucks in everything else. And so the collapsing star is potentially the US dollar, which is now, we're at that point now where there's a decent probability that that's what's transpiring and that's what will transpire. So as rates move and cost of capital moves, if you're in an emerging market and you've got dollar-based debts, you're in trouble. As the dollar moves higher, you don't even need interest rates to be affecting you, although they are. So you have like an Asian 97 crisis, a repeat of that, or some variation of that. And so capital just goes to the dollar as a consequence of it being, as a consequence of that debt market now basically imploding. It actually all rushes back into the dollar, which A, would be inflationary domestically in the US, but B, would be disastrous globally, especially for emerging markets, and deflationary. So it's like people say to me, oh, we're going to have inflation and deflation. I go, yep. Yeah, so all fun.
We live in very crazy times right now, but a lot of the problems, and we spent over an hour talking about this now, are not free market or capitalism, the lack of supply side investment. Many of these countries, you had oil and natural gas drilling banned. It's almost impossible in some of these countries to bring a mine online. You can even drill. You can even do exploration drilling in countries like Japan. The permitting process, building a mine, in most of the European Union, in their landmass, oil and natural gas drilling is banned, and yet they consume an enormous amount of energy. So for these electric vehicles, electricity has to come from somewhere. In addition to building out the electric vehicles with all the parts you mentioned, I mean, the other part I would look at is what's going to generate the electricity.
Yeah. I mean, look, there's so much value within so much that entire chain. I mean, we've gone down the path of we own a lot of drillers, for example, because offshore drilling has been just decimated. But you can go deeper, and there's other little quirky stuff that we own. You got like, say, seismic companies. You go back and you have a look at a bull market, previous bull markets in the energy markets. The guys just doing seismic mapping, who then the drillers will come in after them. Those guys, because it's basically software, the fucking ship. It's not like their OPEX is that high, right? They print money, but they've all gone away. Like there's none of them left. So the very, very, I say none, there's like very few of them left because they all went bankrupt and everything else. Those guys represent huge asymmetry. Now, it's not something that you would ordinarily go in and put a lot of percentage of your portfolio into, but you can put in like a point. And if you've got like a 1 point in something like that can go 10, 20x, that's they can present you with a decent asymmetry within a well-structured portfolio. So, you talk about these energy, you took pipelines, refineries. Refineries is another one, right? I'm just writing our publication now, showing a map of global refinery open and closures. And it's so evident as to where the geopolitical power is shifting to in the world. And guess what? It's not the West. We're all gone woke, and we've all, decided, we're going to shut all these refineries. That's
how you get a diesel absurd spike. Yeah, you need, if there were more refineries running, we would be able to make more diesel.
We're getting rid of the extraction side, saying no, we don't have that. Don't want done with the oil or the natural gas, whatever it was. B, then we're actually getting rid of the infrastructure that's utilized to get that to a usable product, namely refineries in that instance. So what are you going to have to do? Well, we're going to have to import the finished freaking product. It's like much, much higher, and we've just given away all your political security. I mean, was the lesson not learned with Russia, right? Well, back in 2014 was when Germany really went retard, and started shutting all of their coal-fired power stations. They shuttered all their nuclear after Fukushima, which was completely retarded, because Fukushima was a consequence of seismic activity, right, with a
Earthquake.
tsunami.
Yeah, earthquake and tsunami.
And Germany doesn't have any of that. They're not sitting on any fault lines. Like the risk for a nuclear power plant in Germany is not the same as the risk of a nuclear power plant in Japan. It's just not. Like a 5-year-old with a freaking map and a 2 stubby thumbs and a Google search will be able to figure that out. But it created a very strong political narrative. The lefties, the greenies came in, they shut everything down. They started building all these fucking wind turbines. I was over there in 2020. It's ridiculous. The countryside looks disgusting. It's littered with these ugly, ugly, massive towers, which froze in winter and stopped working. And half the time don't turn when there's no wind in the summer. I mean, it's just, and then it doesn't produce anywhere near the quantity that's required to. It's mind-boggling that they've done it. Anyway, the point is they're now paying the price, right? And so, and that comes back to what I said before, which is that your ordinary market, which the mechanisms in a capitalistic market that would ordinarily be taking place now to solve this problem are not taking place. Or where they are taking place, they're taking place in particular jurisdictions. And so that's been a huge focus. Like we're very focused both on the sectors that we feel present asymmetry, but also on the geopolitical realities around those sectors. You don't want to be the guy that invested in the nuclear power plant in Germany only after they then shuttered all their nuclear power plants, right? While at the same time, spot uranium is running, and you kind of go, oh, I got the sector right, but shit, I just lost my shirt. So, and those are just risks that have existed. We've been navigating them, but I think they're also going to accelerate. Unfortunately, there's a pro and a con to it. It's unfortunate because it requires a lot of analysis and keeping on top of things, but it's fortunate in that it creates even more asymmetry, because at the end of the day, you're just going to have whoever has, it's like that old saying, he who has the gold makes the rules. Well, he who has the energy is increasingly given his situation. He who has the energy makes the rules. And, so you want to be on the right side of that because, in a normal bull market in commodities, this stuff can run. But I think this, A, is not going to be a normal bull market. It's going to be an extraordinary one. And B, the participants that will win in it are going to be fewer in number. Until we get to a point, perhaps, hopefully, where either it comes from a citizen level or a political level, I don't know, where we turn around collectively and go, that was insane, and we have to stop it. But again, you can't turn a mine on overnight. It's a decade process. So, most commodity or ordinary long-term bull market in commodities runs kind of up about 17 years. You've had shorter ones, of course. I'm not going to even sit here and say and even worry about pontificating how long this one might be, but we can reasonably say that the bottom was 2-3 years ago. Even if we said it was 4 years ago, we're still in the relatively early innings of this particular bull market. So I got an email the other day from Jennifer, who worked for me. She forwarded something through from a client, and it's like, can we just not stick some? Can I just not put a bunch of money into an index and just like not worry about this shit for the next 10 years? Could I not just not put in S&P because the S&P is down, right? And I would say you could do that in the commodity space broadly. And I think you're going to be relatively better off than if you were in the NASDAQ or quote unquote growth equities, which they've done their dash. So time will tell if we are right or wrong.
Well, I think these supply side issues on commodities there's actually a lot of evidence, I would say, that they've gotten worse over the last 2 years. So the supply side issues were before the pandemic, the lockdowns, the supply chain issues. Electricity growth is still growing globally. So we saw that was a surprising statistic that came out of 2021. Despite the lockdowns, we had global electricity demand growing 6% globally, according to some of the data I looked at. So when you have that to me looks like a bull market. And then with the supply side problems and then demand for electricity growing. So long term, there's a nice tailwind. In the short term, anything can happen, I think, with the rules changes and what the central banks decide to do. If the Fed raises interest rates as we wrap up the discussion, I think they'll potentially break junk bonds unless they are secretly buying them already, or these commercial real estate. So if we do have deflation, I think that's for a short period of time, like a true, maybe short-term bear market where it's really, really painful for 6 months or 12 months. Really, since 2008, the bear markets have been shorter and shorter. They've been painful, but shorter in duration compared to the past. So those are buying opportunities then for good commodities companies, I would say.
100%. 100%.
And Chris, you were ahead of the curve on this. So if my listeners want to find your articles, find you on Twitter, take a look at your newsletters or your hedge fund podcast, how do they do so?
So the newsletter publication can be found at capitalistexploits.at, and our fund management business is glenorchycapital.net. So you can find me.
Well, thank you very much for your time today, and I really enjoyed the discussion.
Thank you very much. It's a first for me to talk to you, so that's great. And I appreciate what you're doing. You've been chatting to a lot of my friends, so I think you're bringing great content to your listeners, and that's awesome. Spread the word.